process understanding is the first element necessary in beginning to determine how and where to optimize operations. The process we're tracking here is an insurance claims workflow, specifically in the property and casualty space. Now, once we understand how the claims process flows, where bottlenecks occur, and where time is lost, we can begin to focus our efforts to re-engineer steps, retrain knowledge workers, or implement new technology in order to increase throughput and overall productivity. The directive from management in this scenario is to find a way to cut down claim closeout times by 10%, and the core task will be to identify specific process improvement areas which will significantly reduce time and in turn costs. So in explaining what we're looking at on screen, each one of these horizontal lines represents the life cycle of a single claim instance, and these icons represent events or activities that have happened to the claim along the way. So right now we're working with a set of 31,596 claims with all of the detail available for us. So we'll focus on our timing metric, our overall claims duration. So on average, we close out claims in 23 days, but it could be anywhere from 6 hours to 15 months, and 15 months is quite a protracted time for a claim to be open in this case. So by clicking on this duration metric, I'm presented with a histogram, which shows me all of my claims by their duration, my minimum, my average, my maximum closeout time. And this large spike to the left of the histogram shows the majority of the claims are done in far less than 15 months. Now by adjusting this slider, I can start to understand how many claims have, in this case, been processed in above or below 42 days. In this data set, we've got 94% roughly of our claims having been processed in under 6 weeks or 42 days, but still a good amount outside of this range. Now we can take this one step further and actually choose to break down this duration histogram by any of the attributes of our process. Okay, so if we're curious if there's an adjuster who's taking their time, or if there's a certain state where claims are taking longer than others to process, we could use any of the attributes of this process to get a better picture as to where the time is being spent. Now if I choose to break this down by adjuster, each one of my different adjusters has a histogram relative to their claims and their book of business. And now it's just a matter of doing cohort comparison, a visual comparison of one against the other to see which one is not like the others, essentially. All right, and then in this data set, I can point to Jim Ricks. His histogram looks quite a bit skewed from the rest of his colleagues. If you keep your eye on our general average is 23 days, when I sub in Jim's histogram, it's 3 months and 23 days on average for the claims that Jim is responsible for. Now this very quickly is showing me maybe I need to go have a conversation with Jim to understand a bit more about what's happening with the claims that he's responsible for and how I can help to try to skew this histogram back towards the rest of his peers. But let's stop picking on Jim. We'll go back, set our 42-day threshold. If I just want to look at those claims taking longer than I expect, I can apply this time threshold as a filter. And now I'm simply working with those claims that have taken longer than 42 days, or 6.1% of my overall population. Now another consideration here from a timing perspective could be a certain event occurring multiple times perhaps. In this case, it could possibly be a requirement for more information. Now this is denoting an area where we've had to go back to the customer or third party to ask for data that we don't currently have to move the claim forward. And of course, that may not happen in a timely manner, whether they respond to you quickly or not, and we're inherently inducing friction into the process by having to go back to that customer. So by clicking on this event, what I can get an idea of is how commonly or how often is this event occurring as a part of these timelines. And we can see this histogram shows us that this requirement for more information could happen anywhere between 0 and 4 times. So we could have this happening 4 different times as a part of any claim. We've also got stats relative to what's happened most commonly previous and post this event. So in case there's anything that possible correlation for what's triggering it or what's happening downstream. And in theory, I could then just go and look at claims that have had 3 or 4 instances of this requirement for more information event and dig a bit deeper on those. Now, in this case, I'm not going to do that. What I want to do is get a bit more quantitative and start to understand, exactly how much time does it cost us each time we run through this specific event. We don't have the data we need to move the claim forward. And we can look at that using the time interval mechanism. Now, this allows us to set any event as our starting, our left bound, and to the right, we have our right bound, our ending event, and look at the time gap in between. So right now, we're looking at the requirement for more information until we have that claim being flagged as the additional info having been received. So how much time is that costing us? And again, we've got the minimum, the average, the maximum, and so on average, it takes us 4 days to get that data back. To add insult to injury here, we saw this can happen up to 4 times as a part of any claim. So this could definitely be holding up claims and causing this overall duration to be protracted based on the amount of time it's costing us. Now, we've just taken a look at the ability to drill in, understand overall claim duration, how that relates to any one of the different attributes in our process, and then also starting to get a bit more quantitative about how much time any one given part of our process is costing us. In this case, our lack of gaining data up front and having to reach back out to the customer to get some piece of data to move a claim forward. And in this case, our directive would be to ensure we get all the required data from that customer upon the first notice of loss event.